President Trump announcing the 25% tariffs to both of our neighboring nations and raising up the tariffs against China from 10 now to 20%. Let's bring in our trade war correspondent. I've named him as such today. Congratulations to Doug Flynn, Zito Capital Management, who joins us.
Thank you.
Special correspondent, maybe is the way to do it. So, Warren Buffett did say trade war, it's an act of war. He used that term. So this is a little bit more, or maybe a lot bit more than what we saw last time from Trump. What do you make of the way this is getting underway?
You know, I think what keeps getting lost is that if you have, any place that sells more to us than we buy from is going to lose. And China had this issue the last time Trump did this, because eventually the country like China or Canada in this case, or Mexico, is going to run out of stuff to tariff before we do.
But we'll feel pain. In other words, we could feel rising prices and all the rest. So it's not like it would be like a loss, but like Kyrie Irving got hurt the other night. Like it would be a loss, but you get a big injury or something like that too at the same time, even though you win the game.
It's a plus here and a minus here. I mean, and Trudeau said, tariffs are stupid. Then the simple answer is, well, then make them all zero if they're stupid. And of course, they won't make them zero. So it's really that simple if they're that stupid. But here's the other thing, over 40% of the revenue of the S&P 500 stocks, which everybody owns, comes from overseas. And so one of the things you can do is you can look to companies that have 90, 95, or 100% of their revenue from inside the United States. There are many companies that have that, and that's sort of a tariff insulating way to invest. You don't just invest in the top companies, because a lot of them have global footprints, but companies like T-Mobile, Darden Restaurants, Progressive, those kinds of companies, and there are many, just to name a few. I'm not recommending them, just to give you an idea, but you should look into that.
Okay. What do you make of the market? We'll get the close here in a minute. Yesterday was a big down day when all of this broke. Looked like today would be just as bad, if not worse, but then it started coming back. So what's going on here? One thought, not just stocks, interest rates. Earlier I saw a sign in the bond market that some folks thought was quote unquote recessionary. What is the market telling us?
Yeah, well, so bonds are up about 3% year to date after, lagging behind for a long, long time. And so the U.S. market is basically flat to now negative. The NASDAQ is just about in correction territory. So the bond market is telling you that things are kind of weakening, which we expect. And so interest rates have actually come down. And the way bonds work is if interest rates come down, the values go up. So the bond market has treated you well, and now gives you an opportunity, if you had money there, to maybe look for some opportunities to buy some stocks. And interestingly, the international index is up 9%, while our market is flat. So, they were poo-pooed for a long time. And so, again, diversifying, looking at other things is something that you want to do. But the bond market has actually helped a great deal balance your portfolio right now.
Well, Trump said he wanted lower interest rates, so this is one way to do it, I suppose. Thank you, Doug. Doug Flynn joining us right now, closing bell time.